Dear students, we will do the new module, module 15. This is part 2 of characteristics of salary. Module 14, I have explained 9 points. So now we will start with the 10 point. Deductions made by employer. Deductions made by employer. Deductions from gross salary. Provident fund will be there, loan will be there. So always you have to remember, we will not, what the amount will be credited to your bank account will be net salary. But the taxability is on gross salary. Whatever is employer is deducting is considered as application of income. Your gross salary you have to pay tax. When you are getting net salary, what all deductions you have to add back to get the gross salary. 11th point, salary or pension received by UNO employees. United Nations Organization, World Bank, World Health Organization, fully exempted under section 10. Now salary received by a teacher or a researcher from SAARC member country. It's SAARC member country, it's exempted for 2 years. Researcher or teacher. Now salary as a partner. So this I have explained, salary as a partner, salary, commission, etc. received from partnership firm will be taxed under income from profit or income from profit and business or income from profession or business. It will not be coming under salary because there is no employer-employer relationship in partnership. We have learned that profit from partnership firm is exempted under section 10. This is, we are talking about salary or commission received. This will go to computation of income from business or profession. Next is salary received by a sole proprietor. Sole proprietor. Do you think that a sole proprietor can claim salary for his services? No. He cannot get any salary for the from the sole proprietorship. He cannot tax under salary income or income from business or profession. So there is no question of this remuneration taxable in the hands of the owner. Next is payments received by legal heirs of the deceased employee. Legal heirs. So if sometimes death happens to an employee at the time of through the working life of the employee, that will be exempted. Whereas family pension will be taxable. That will be taxable under income from other sources. Now payment received after cessation of employment. Payment received after. Payment received after completing the service. That is taxable under salary income itself. Say for example, an employee retired from job. His 3 month salary was pending, but when he will receive, it will be taxed under income from salary. Now voluntary foregoing of salary. Voluntary foregoing of salary. We have to remember some of the chief ministers, presidents and all, they work for 1 rupee a month salary. But in the entire amount will be, it is considered as an application of salary and thus it will be taxable. Now previous year for salaries. Previous year, it's always starting with 1st April, ending on March 31st. Now advance salary, meaning advance salary versus advance against salary. Advance against salary. Advance salary meaning sometimes when you are in need of job, you will approach the employer asking for advance salary. Maybe hospitalization, death or treatment, anything. That will be considered salary income, it will be taxable. Advance against salary meaning if you are taking a loan from employer, it will not be taxable. Next, arrears of salary. Whatever arrears of salary you are getting, it will be taxable in the year of receipt. Now, salary in lieu of service. Salary in lieu of service. In lieu of service, sometimes you will be asked to resign from the organization. They will usually give 3 months salary as compensation because till you find a new job, you have to support the family, all your expenses have to be met. So that will be considered as salary. Next is no relevance for method of accounting. Method of accounting. You can follow the method of accounting Diwali to Diwali, calendar year, anything. So method of accounting is relevant for income from business or profession, or to a certain extent income from other sources. Salary is taxed on due or received basis. If salary is due to you for the work you have done, it will be taxable. Method of accounting is not relevant for salary income. Now salary in foreign currency. So that is the last point, 23rd, foreign currency. Salary in foreign currency. Foreign currency. If you are getting salary in foreign currency, what will be the condition? You have to remember, it will be converted as per the RBI conversion rules, and it will be considered as an Indian income, and it will be taxable. So here you have to remember 23 points. 9 points we learned in the first module. Second, deductions from salary is considered as application, and gross salary will be taxable. Salary received for services in United Nations, World Bank, World Health Organization, fully exempted. Those who are working as a researcher or teacher in SAARC countries, from India, you are working in India, 2 years they will get exemption. Salary as partner will go to income from business or profession. Profit from a partnership firm is exempted. Salary and commission will go to income from business or profession. It will not come under salary income because there is no employer-employer relationship. That is the basic condition for taxing an item or treating an income as salary income. Now, sole proprietors cannot claim any salary. So, there is no question of taxing that salary. Legal heirs, amount paid to legal heirs will be exempted for the deceased employee, but family pension is taxable under income from other sources. Payment received after the service, after the retirement or after termination of service, it will be taxable. Sometimes they may give you after the retirement, it will be taxable. Voluntary foregoing of salary is considered as an application of salary. I told you chief ministers, presidents and all work for 1 rupee a month salary. It will be taxable. Previous year will be 1st April and ending on March 31st. Previous year, you have to remember, it will be uniform. You cannot change that. Advance salary versus advance against salary. If you are asking your employer for 3 months advance salary, it will be considered as salary income. At the time of receipt, you have to pay tax because salary is taxed on due or receipt basis. Whereas advance against salary is a loan you are taking from an employer. It will not be taxed. Then arrears of salary, whenever you are getting arrears of salary, government employees usually get arrears of salary when the government will revise the pay commission. Salary, we will get arrears. It will be taxable on the year of receipt. In lieu of service, then in a serving notice period, if you are getting 3 months compensation or 4 months compensation for salary for leaving the organization, so that will be considered as salary income, it will be taxable. Method of accounting is not important for salary income. It is important for business or profession or to a certain extent income from other sources. Last point is, if you are getting salary income in foreign currency, that foreign currency will be converted into Indian currency as per the RBI conversion rules. That income will be taxable. So with this we have completed the characteristics of salary. This is what I wanted to explain in this module. Happy learning. Thank you.